Hello and welcome to this Real Deals webinar in association with IPEM and Palico that will look at the opportunities and challenges for the European mid-market in a post-COVID environment. This session will focus on where the industry is going and challenges it is facing in light of the current crisis. It's certainly undeniable that the COVID-19 pandemic has changed the way the industry operates and it's impacted many sectors for better or worse. But there is still considerable activity in the private equity universe, with managers looking to deploy record levels of dry powder, larger funds continuing their fundraising efforts, and private equity firms seeking out deals that remain attractive at this time. We have an excellent panel today and lots to get through. So without further ado, I'll hand over to you, Claire.
Thanks for that introduction, Talia. As you said, I'm Claire Commons, and I'm head of strategy here at Palico. We're really excited to dig into the discussion today about investing in this crucial segment in Europe, namely the mid-market. First, I'll introduce each of our all-star speakers and then provide a little bit of an overview on the market and what makes this such a special segment. I'll then ask a few questions and then it's your turn. We're going to open it up, so don't be shy. We'd like to hear your questions as well. Okay, let's begin. We have here Juan Luis Ramirez. He's the founding partner of Portobello Capital, which is the leading Spanish middle market private equity manager, about 1.2 billion assets under management. And Portobello takes controlling stakes generally in mid-market companies in a broad range of sectors. They're really looking for leading companies in under-penetrated market niches, defensive non-cyclical characteristics, which we'll talk about in the context of COVID, with clear cost advantages and ability to grow both domestically in Iberia as well as internationally. Some of the investments they've made have been in frozen food, dentist clinics, holiday hotels and resorts, and my favorite, the private label ice cream manufacturer called the Ice Cream Factory. Juan Luis, I know you're on the board of that. Portobello's most recent fund, Fund 4, was raised in 2017 with a total of 600 million euros from investor commitments. Then we have Karl Nackau, Senior Principal at Invest Industrial. This firm was founded in 1990 and has deep roots in the Italian industrial sector. Now it's expanded into three main sectors: consumer and leisure, healthcare and services, and industrial manufacturing. 2/3 of the investments are in that area, the Southern Europe, Italy, and Spain, but there are also investments in the UK and elsewhere. Some of their famous iconic brands include Ducati, which was sold to Volkswagen, and Aston Martin, but they also invest in other companies like Health Transportation Group, a large provider of mission critical ambulance services in Spain, and then Seme Group, pump and valve manufacturer, an Italian company. The firm closed recently on its 7th fund of 3.75 billion last year in the last quarter, the fourth quarter. And they also have a dedicated lower middle market sleeve Invest Industrial Growth Fund. Then let's turn to Laura Dillon, who's principal and head of the Irish team at Waterland, or Waterland in Dutch. The firm was founded in 1999 with heritage in the Benelux market. And to date, Waterland has made investments in over 500 companies. The firm currently has 6 billion of assets under management. And again, the focus is on small to mid-sized companies. Waterland invests thematically, taking advantage of trends like aging population, outsourcing and digitalization, leisure and luxury, and sustainability. The firm has now expanded beyond its home market into the DACH region, Nordics, UK, Poland, and as we'll talk about with Laura, most recently, Ireland. And since its founding in 1999, Waterland has consistently been a top performer and achieving awards from folks like Preqin for consistent top returns. And finally, we have Ilona Brome, who is Managing Director at Wilshire Private Markets Group. And Ilona allocates to mid-market funds like this, from the private markets group, which has about $6.5 billion of discretionary capital invested in strategies like venture growth, buyout, and real estate. The firm has offices globally in Europe, North America, and Asia, and Wilshire invests its funds and then its bespoke separate accounts in these niche boutique private equity funds. And so within Europe, Alona has an expertise in identifying, sourcing, and investing in these top quality mid-market private equity funds, which is why we're especially grateful to have her voice and expertise on the panel. And finally, I'm Claire Commons. As I said, I'm the head of strategy here at Palico. I actually, for 20 years, was an investor and LP. Actually used to work with Alona, but now I'm at Palico, and we're the leading online platform in the private equity ecosystem. We have over 5,000 GP members and 3,000 institutional LP members. Our fundraising platform, we provide LPs with deal sourcing capabilities, connecting them with top quality private equity managers around the globe. And then our secondaries platform, we connect selling LPs looking to sell their fund stakes with other LPs looking to buy their fund stakes. And really the magic is we have a digital streamlined process that makes things super easy and efficient for both LPs and GPs. All right, so let's get to the topic. And I just want to set the table a little bit for why we're talking about this. So the mid-market can be thought of as companies generally with enterprise value of approximately 250 million euros and below, although that does depend on different people's definitions. And why is this such a critical investment area for investors? There are a couple reasons. One is the mid-market is actually very critical to get market exposure in Europe. Europe is really run on small and mid-sized companies. Then, of course, you want to look at performance, and performance has actually been really good, especially if you look at it compared to some of the larger funds. And we'll get into this in a second. It's also, when you look at not just the average performance, but the kind of top quartile, there's really the ability to pick top managers and top investors. So then we kind of dig into, well, where does that performance come from? And that's really through operational, roll your sleeve up, operational improvements and expertise, rather than catching the wave of capital markets. So in that first piece, when we look at Europe, and this is really different from markets like North America, like the US, small mid-market is critical because Europe's economy is really powered by mid-sized businesses. The vast majority of businesses are small and mid, and actually 2 out of 3 jobs in Europe are in these smaller businesses. So just to be able to capture the power of the European economy, this is a really important sector to look at. Then when you dig into the performance, you can see on average, these smaller and mid funds actually do better than large funds. And then really interestingly, there's this opportunity to really outperform if you pick the right managers. So where does that come from? Well, it's not from debt. I mean, you can think about this intuitively. The smaller the company is, the less interested banks are going to be to loan it a lot of money. And similarly on valuations, they're not as rich. So where does it come from? It comes from operational improvements, things like adding professionalism, a great family-run business looking to really professionalize parts of their business, diversifying the product offering, going up and down the value chain, or the expertise of being able to expand into new geographies. You may be the best manager in Spain, but how can you take that theme and apply it to Italy, or how can you expand it broadly in the region? And finally, then you can take advantage of some of the exit opportunities that, there's a bunch of exit opportunities. If you construct a great portfolio, you buy and build, and you do that great organic growth, strategics will be really interested, the industry leaders, potentially some of the larger private equity funds, and then even the public markets can be an option. And what's so great about that is with these exits, generally there's more competition and higher valuations. So if that kind of give you a perspective of why this is a critical segment to invest in. And now let's get to the experts themselves. Great. All right. I'd like to start with you, Alona. And as as we all know, Europe is I think it was de Gaulle said that France is, you know, how do you govern a country with 300 cheeses or whatever? And then I'm going to ask you a similar question. How do you create a great diversified portfolio in a segment that is pretty fragmented? Do you try to find the best services firm in each country, or do you focus more on specific geographic sectors? How do you really create a thoughtful program portfolio of mid-market private equity funds?
Thank you, Claire. So our portfolio approach is very much global. First of all, that's important to note. And second of all, we try to combine a top-down analysis with the bottoms-up analysis. And given the COVID pandemic happening, we've dig deeper from a top-down perspective into industry sectors we like and industry sectors we want to stay away from. So technology and telecoms, healthcare and life sciences, those are more favorable sectors than, let's say, travel. And we've done a full analysis on that. But having said that, if you look from the bottoms up in the mid-market in Europe, it's really tough to find true sector experts. Most of them, they have a broader focus, maybe a few pillars they follow. And I hope that Juan Luis and Carl would agree with me, but I think the more southern you go, the best managers tend to be more generalist players, because the market dictates that in terms of deal flow and in terms of opportunities you can see. So in the end of the day, we have the top down, but the bottoms up is always manager over market. And therefore, you would see in our portfolios a combination of true sector specialists and more generalists who have real insights in their local markets.
Well, great. Well, then maybe I'll kind of teed that up to, how about Carl? Being an industry expert or regional expert, how do you at Invest Industrial do a good job at sourcing? How are you competitive on the sourcing side? How do you find the best businesses in a variety of industries, just as Alona was speaking to?
Yeah, well, definitely agree with Alona that in Europe overall and in the southern part of Europe, very much the general strategy is still the prevailing model, and the relationship between LPs and GP sort of puts trust in the GP to tilt that portfolio as we go along, right? So for us in the last 3 to 4 years, we've taken, and without trying to predict the macro, but just a general late cycle approach, so similar to the prior comment, very much steering focus towards healthcare, medical devices, food and beverage, and general resilient businesses, kind of, taking off some potential volatility in that, and then focused our sourcing efforts around that. And this is less of a post-COVID remark on sourcing, but it's the questions. I mean, it's very much around the networks and the deals you've done in the past, coming back to finding tangential investment thesis around a similar story. But well, you have to make sure that you evolve as well, and then you add the transaction, the certainty of execution on top of that. The more deals you've done, obviously, the more credible you are coming in to a discussion and making sure that remains a proprietary discussion.
Great. And how about you, Juan Luis? You know, when we were speaking earlier, you were talking to me about your ability to find and work with entrepreneurs in your market and really create companies around them. On your end, how do you think about sourcing among the different industries and different markets? How do you build a company within Spain and then add on in Portugal, with some of the entrepreneurs that you work with?
No, basically, we tend to buy always from companies, from entrepreneurs that for the first time, they are going to have shareholders. So we try to find these hidden jewels in the regions, family owned or still owned by the founders. For whatever reasons, they are feeling that they need some help, or for whatever reasons they want to sell a part of their position. Up to now, we've been doing majority buyouts. So we've bought control, but now that we see that there are many options in the market of those entrepreneurs that prefer to sell a non-controlling stake to bring value and then sell together, in some years, we've raised a new fund just for that, with these structured partnerships. So having those entrepreneurs that for the first time have shareholders, we need to be extremely careful not to be too intrusive at the beginning. There are lots of things to do in the first, say, 100 days. So first, to start with professionalization, which is one of the main items or the main means of value that we try to create. So first, we need to organize everything in terms of committees, boards. We try to bring always some external support, some of our industrial advisors to help in the board. We need to redo all the information systems, the ERP. We need to say how do we want to be reported. How we don't like to change CEOs, but normally we have, or we need to enhance or to reinforce some of the areas depending on what is the strategy that we have agreed normally with these CEOs at the beginning. So first, professionalization, and in the first, say, 100 days to organize properly all of that. Then we find on those family-owned companies lots of means of quick wins, like, for example, balance sheet or working capital. I remember one of the companies that we still have that we bought for Fund 3, which was one of the leading companies in canned vegetables in Spain. We discovered prior to acquiring it that they had in the warehouse like 180 days of stock, while Bonduelle, for example, in France, had just 90. So obviously we haven't come yet to 90, but in the first half year, we were able to save at least one time EBITDA in terms of debt because of this optimization of working capital. We normally tend to trust on advisors that help us in specific issues like working capital or these kind of things. Then efficiency is something that normally is able to be improved, especially if those companies have a production side. And this links with the second means of growth, of value that we always have, which is growth. So professionalization and growth. And for growing, we need to improve a lot of things in the company. Now, normally, many times somebody asks me if we change the CFOs, and I would say that we change many times the production manager than the CFOs, because of that, because probably they need to adapt to a new way of working for being much more productive and more efficient in the production side. You said the ice creams. Probably the main means of value of the ice creams was to be able to produce on a more efficient way in order to sell to all European clients and not just the Spanish little clients that were there when we bought the company. Then recently we are devoting a lot of time in digitalization as well. This is something that is easy to say, but there are lots of opportunities, and probably this problem that we have had with COVID in the last 3 months is accelerating a lot, all related to digitalization. Then once we are able to grow through buy and build, and this links with some of the good opportunities that we find in the Spanish market, where if you were saying that middle market in Europe is important, in Spain middle market is much lower in terms of size. So if we are able to select the good platform in order to buy and build and create a good platform to grow and consolidate those markets, those fragmented niches or markets, then we are able, once we get dimension, to compete in the international markets. And this links with the third area, which is internationalization, no? Where we normally bring value to our investors.
Great. Well, let's, speaking of growing and internationalizing, let's turn to Laura, who is having the exciting task of growing Waterland in a new market in Ireland. Maybe you can talk through your experience so far and how you've been able to grow the business in Ireland, kind of retaining the DNA and the success of Waterland in a whole new market, and some of the challenges you've faced and some of the things that have worked so far.
Yeah, thanks, Claire. I should say that I started on the 16th of March at Waterland, so it has kind of just been as we entered COVID-19 lockdown, so it's been an atypical start. But I think it's also really helped to really emphasize to me, you know, how easy it is these days to actually communicate much better. I think all the team, you know, we've all adapted pretty well. Waterland takes very much a local for local approach. So it was started 21 years ago in Holland, then spread into Belgium, has been very strong in Germany. We have a small office in Poland. We've an office in Zurich. 3 years ago, opened an office in Copenhagen to look after the Nordics, and then also an office in Manchester to look after the UK and Ireland. And we did a transaction last July investing in the healthcare sector in Ireland. And following on from that transaction, I think it became very clear to the partnership that Ireland is quite different to the UK market. So again, took a local for local approach, and we've now opened an Irish office. I think the way that we really like to make sure that we can kind of make sure new offices feel part of, you know, the more established offices is very much by really integrating very strongly from the get-go. So we do that across multiple ways. Obviously, we've got our weekly Teams calls at the moment, but we also get together every 6 weeks or so at a senior level, physically in person. Obviously, right now, we can't do that, but in general, it would happen normally every 6 weeks. And the entire team would get together about 3 times a year, physically in person as well, because we do feel it's very important to be able to share knowledge. We all invest from the same funds, so we very much collaborate. So literally nearly on a daily basis, I'll be in communication with either our UK team, our Dutch team. So it very much is where we're, I suppose, collaborating across all the offices, where I'm potentially looking for add-ons for some of our, 50 European portfolio companies, where maybe there's an opportunity comes into, maybe our UK or Dutch colleagues, and they say, right, that's one for you, Laura, that's based in the 32 counties of Ireland. I think that in terms of, how do we do that as we get bigger and as we expand more offices? It's definitely challenging. It's clearly much easier for offices that are geographically very close to each other. Ireland is obviously just a little bit geographically dispersed, and that will definitely, mean that my team in Ireland needs to physically go to some of the other offices on a more frequent basis. And when we're allowed travel again, that's certainly something that we have planned. I think that our market thesis driven approach, as we've already said, means that, when I come in to try and develop the Irish team, I can very much leverage a lot of the market analysis and work that's been done across all of our other teams over the past couple of years. So we're very rigorous about kind of taking market approaches and then, looking at it not only from that country level, but looking at it from a broader European level as well, because we do like to do consolidation across the entire of Europe. I think also that obviously, when we think about what's going to be different for me in an Irish context, right now in COVID-19, difficult to build new relationships given that we can't physically meet each other. But I think it's very much, building the trust, taking the time, building our reputation, Obviously, Waterland is incredibly well known in Holland, Belgium, Germany. It's going to take us a little bit of time to build that same level of trust and rapport and reputation with Irish business owners and entrepreneurs. But I think the view that Waterland takes is by having kind of a local team on the ground that will certainly help to accelerate that relationship building. And I'm hoping that at some point, maybe post-summer, we're able to go and meet people.
Great. We've been tiptoeing around the COVID topic, which of course we'll get to. I think we all probably a little weary of just only talking about COVID. So I'd actually like to ask Ilona kind of a broader question, which is, you said very accurately that you are a global investor and you invest in the US and you invest in Asia. And both those markets have higher growth expectations. Europe is I think we can all agree, pretty low growth environment historically, and expectations are low growth. So how does Europe even fit in? Why would you invest in Europe? Why would you invest in some of these groups? How do you feel like at Wilshire some of these groups make money even in this kind of low growth expected environment going forward?
Now, I think in the end of the day, we don't care about growth or GDP growth projections. It's helpful for companies, but in the end of the day, it's like you mentioned in your introduction, it's all about creating operational value, not dependent on the economy, not dependent on leverage, but really transforming the company in something better, whether that's internationalization or buy and build strategies or growing the company in other ways.
We were speaking about Zoom, and unfortunately your connection is not super. So I'm so sorry. I'm just gonna cut you off, but I think I got the gist, which is that you're kind of agnostic to the geography because the ability to add value through operations, you can do that in any market. So I apologize for interrupting you on that. But maybe we could actually go back to Carl in terms of some of the things that you do at an industrial. Actually, you and Juan Luis, you'd mentioned Juan Luis, digitalization. I know Carl, you and I have spoken about sustainability and how that adds value post acquisition. Maybe Carl, you can talk about how that can really help post acquisition in terms of positioning your portfolios for attractive exit, as well as making them better businesses, hopefully.
Yeah, and as well as actually being able to buy the companies in the first place. It's
right.
Certainly an important differentiator when it comes to positioning your firm, and increasingly you meet like-minded people at the other side of the table who really care about sustainability going forward. So we have 3 people that are dedicated to sustainability in-house, and with that we've been able to hit a lot of milestones, and that comes through in the sourcing work. Obviously, post-acquisition, it's difficult to measure it, very difficult to measure it economically today. We have just switched to a quarterly reporting, financials. We've been reporting quarterly to our investors that are for ages, but we've been switching to a quarterly ESG reporting during this year, which is a big task. Still very hard to measure. What you really see is the cultural element, the engagement around it, and also how we can work across our entire 20 portfolio companies today, from the lower mid-market to the larger companies, and getting them together. And so it's created much more of a bond around a common purpose. So there is that positive effect. It's also difficult to measure it on the exit front still today. But we do have a very firm belief that this is a key premium aspect of selling a business, right? There's no excuse for saying, well, we have phenomenal profit margins and great management, etc., but we just haven't addressed fundamentally ESG issues. And that's just like for many LPs today, it's just a no-go zone, regardless of returns to invest with a manager that hasn't addressed it. It would increasingly be a no-go zone for future buyers.
Great, and I'm going to just pause for a second and remind the audience we'll be openings for questions in a few minutes. I see we've got a couple questions, but please do add some questions if you have them. Don't be shy. So we'll get to them in a minute. Juan Luis, why don't you talk to? I thought it was interesting you mentioned the digitalization. Sorry, Alona, with your internet connection, and I think all of us have been. We've all been surviving. I'd say a lot of us have been thriving through digitalization during COVID. I know, for example, at Palico, interestingly, we've seen a huge increase in transactions on our platform because I think, look, at a digital platform like Palico works whether it's sunny or rainy or whether it's good sanitary conditions or not. So I think, Juan Luis, you had mentioned the digitalization kind of even before COVID, but maybe you can talk about how are you able to help some of your companies you invest in use digitalization as an improvement strategy.
That's a hard one.
Well, you brought it up, so I'm just
yeah,
following
no,
on
absolutely.
your comment.
Absolutely. This is something that is getting more and more important, no? And what we have, and we are on the way of bringing, not bringing in because we don't have yet the size to have people inside to help us, but consultants to come to the companies and see what kind of things can be improved with digitalization, which is not only connections. We try to be efficient in the boards, but also in the industry, in the production plant. How can you connect all digitalization on softwares of predicting demand? For example, in the ice creams that you pointed out, we improved predictability of demand from 40% to about 65%, which is something very relevant in a company that has more than 1,500 SKUs. And this software of predicting demand came from taking into account the weather, the historical data, the day of the week, how the bank holidays are like in the different regions in Europe. So all that being combined helped us in order to be much more efficient in the production side, with the production plants, but also with the stocks that we needed. No, so
have more people been eating ice cream in Spain during confinement?
Yes, but we finally sold the company to an Italian big company like Ferrero. So probably
so yeah, that's their problem. Yeah.
We finally convinced them to avoid disappearing from the shelf in between May and November, and be there with ice creams and not just with the normal chocolate that they sell. And we show how to produce a Ferrero Rocher in ice cream or a Moncherie, and they were convinced, and in some months they bought out the company from us. No, this was just an example. We are, for example, one of our recent investments that is a pet food company. I know that Waterland has a good one as well, but we have this company in the north of Spain. We are analyzing how to create new distribution channels for distributing our products, instead of being only our brands and white brands in the retailers. So there are some digital initiatives to go directly to clients, and this is something that has to do with one of the projects that we've put in place, no? And this regards to digitalization as well. But this, I think that more and more we would need to reinforce these areas, which, by the way, are the ones that probably are less reinforced by those entrepreneurs that founded the companies 50 years ago, and that they have been alone and doing a great job to come to where they are now to attract our interest. But now that we are in and to put those hidden jewels onto potential future buyers, big funds in Europe or trade buyers, there are lots of things to do, and digitalization is one of the things that would need to be reinforced there.
Great. Why don't we turn to you, Laura, now? You're starting things up in Ireland, and I think a question that's on everybody's mind is kind of some of the opportunities that you're seeing, both in terms of new businesses you can work with, in terms of pricing. Are things feeling very opaque and like no one wants to do business, or are you seeing new opportunities opening up, more entrepreneurs, more business owners looking to partner with firms like yours in a time like today? And how does that reflect in pricing? So volume and pricing opportunities.
Yeah, so what I should say is the private equity market in Ireland until, I suppose, about 5 years ago was quite underdeveloped. Then the Irish government backed a number of private equity funds that have helped to really mature the market. It's still much less mature than most of our European counterparts. But I think that what's happened is now there's a bit more trust between private equity and the entrepreneurs. Entrepreneurs have had very good success stories. There's been some very good exits, and now that really helps to make it an alternative. Historically, it was maybe family offices were providing that level of equity support, or Irish people by their very nature really like to own their shares, keep their shares, take debt on, or indeed, you know, we're clearly a property people, which didn't go so well for us down through the last downturn. So let's hope that doesn't happen again this time. I think what I'm now seeing as a new entrant into the market is that there's a period of uncertainty. There are clearly a number of businesses where, you know, maybe in the travel industry, cash flows and the balance sheets have unwound pretty quickly. So there has been a number of transactions that have happened both in Ireland and internationally in some sectors that have clearly been quite badly impacted, and there's been working capital requirements. I, for example, have one portfolio company, a nursing home business, and we are seeing that there is a little bit of movements and discussions in that sector. But I think given that across Europe and Ireland included here, you know, governments are supporting businesses at the moment and are indeed supporting payroll, and there's a lot of people on furlough programs. I think what's happening right now is that is delaying, I think, deals probably happening. But there's definitely stuff that was in the pipeline that's concluding, that was there before March, and new stuff is definitely opening up. I know I'm already being approached about a number of opportunities where either businesses are trading incredibly well because of COVID-19 and they're in maybe the digital sector, or they're you know, have a gap in cash flow and they need more short-term support. I think people in the middle are probably holding off until there's a bit more clarity. I know certainly last time in Ireland through the last downturn, it took a period of time for pricing expectations to meet between sellers and buyers, and I think that will happen in a shorter period of time this time. But I think it will. I think, you know, coming into the summer, I think it might be busier actually than most other summers. But I do think that there's going to be a period where pricing expectations will take a while to settle, and people understand what the future is going to look like.
Great. Speaking of kind of thinking about the time it'll take, and a lot of this is uncertain because we don't know when things will recover, both from a medical perspective, economic perspective. Carl, I'd like to ask you about how you support and support some of your portfolio companies. You and I were speaking the other day about real estate, and I was chatting with you about a friend of mine in the business who's saying, look, these little tenants, they're going to do everything they can to keep them from having their lights go out because it's so hard to get another little pizza tenant in a shopping center, a little nail salon that we know that will kind of come through this, and we don't want the doors to go dark. And then I'd love for you to share about your investment in the theme parks, because iconic investments in these really interesting assets. As you said, it's super hard to build these again. So how do you help some of your portfolio companies, like, for example, theme park investment, sustain and get through this crisis?
Yeah, absolutely. So we own a theme park south of Barcelona called PortAventura. It's the second largest theme park and resort in Europe after Euro Disney. Phenomenal asset, and as a private equity investor, it's one of the classics that you don't want to invest in a theme park from grounds up, but as a second or third investor with enough investments on the ground already that are still within their economic life, you can actually make a very attractive return if you run it well. PortAventura has been a great investment, and it's a phenomenal quality of an asset, one where between 4 and 5 million visitors every year show up over a 25-year period. Obviously, with the exception of this year, where we have not been able to open the theme park until we're opening it now on the 8th of July, which is a bit later than theme parks in the Netherlands and in Germany and in Italy, and significantly later than theme parks in China, for instance. So we've lost a big part of our peak season, but as a long-term investor, I think this is where private equity is a great supporter overall. You take the right approach to leverage and the right horizon, and it's obvious that you have to do what you can to support an investment like this to come back to a much more normal business in the years ahead. But what we've done to support them, we're using our Shanghai office as well as our US team, but the China team has been more relevant to really monitor how they came back and opened. So we've watched a dozen different theme parks in Asia, mostly in China, the measures they put in place, and then as Europe has rolled out the theme park season, seeing best practices around Europe, and we've designed our own approach to be able to welcome families for a safe theme park environment in a few weeks. So it's incredibly hands-on in a way, obviously, that no one could have predicted.
Yeah. Well, I've got 2 young children, so I wrote down the opening date. So hopefully I'll be there. Ilona, why don't we wrap it up with you before we get to the audience questions, which there are a bunch. What, you kind of sit and look at all these different investment opportunities. Has something popped out at you at Wilshire as being a really compelling theme or investment opportunity post-COVID? Where are you putting your new capital? Or is it the same as always and nothing has changed?
It's on one hand the same, because we look for the best managers, while that's of course more on the venture growth space, but that has surprised me to the upside, how that seems to be hardly impacted at all.
Are there or do you feel like there is a distress element to play, or not yet?
Yeah, that's a good question. We've been looking a lot at the distressed debt space and distress for control space, mainly to global organizations, and we've provided most of our clients with some research reports on the space, because we think you can't time the cycle, but it's good to have money with best managers who can ride this, who can ride the cycle and who can benefit from this complex environment.
Great. All right. Well, I'm going to turn it to the audience questions now. And there's something that came up that I'm going to start with. And that is post-crisis. Are you feeling like entrepreneurs are more open to having private equity in their structure? And I think, Juan Luis, we were talking about this because of the idea of both control and non-control investments, and how that fits into the way that you work with entrepreneurs. So why don't you start with that? So our post-crisis, are you seeing more interesting and compelling entrepreneurs who are open and willing to work with private equity?
No, definitely. Before this, like a couple of years ago, we thought on start considering minority investments. So this kind of partnerships with the same entrepreneurs that we've partnered for long. No, it's true that with this crisis, I would say that in 2015, just 5% or 10% of our deal flow would be of this kind of entrepreneurs that would not like to sell control. The rest were happy to sell or to sell control and remain as minority investor or shareholder, being the running the show as CEO. But it's true that with all this, we have increased. Prior to COVID, we had like 40% of the deal flow coming with this kind of entrepreneurs, happy to sell with us in 5 years' time, but not yet, not at this time. I think that now with COVID, this has increased substantially. So there are many investors, many entrepreneurs that own their businesses that are either needing capital for stabilizing the company and stabilizing the own capital compared to debt or compared to the normal activity that is burning cash now because of the closure or whatever, but also because they are sensing all those opportunities that are in the market, and they would need capital to take those opportunities and buy those companies, which is something that in Spain, like an economy like ours, where there are lots of tiny companies but are very good and they have good products and could improve a lot the portfolio of those potential acquirers of these leading platforms that we like to find. Those entrepreneurs perhaps they don't like or they don't have enough debt capacity to go alone, and they are happy to get external help, not yet controlling help, but external help, and to somebody that is able to create value with him and sell together in once this value is created in 5 years' time, when you can find a more diversified company, more professionalized, with some of the sales abroad in the international markets. And we are really facing that opportunity. We are about to close the first deal of that fund, which would be, well, actually we've called the money today, I think, or tomorrow. So we would be doing it in a couple of weeks. And it's exactly this situation. And I'm sure that we are going to find more and more compelling opportunities of this kind. And on the other hand, of the normal buyouts of those entrepreneurs that are retiring and they want to just sell 100% or keep 10% with some of the members of the team and sell the rest to somebody like ours, of course, would be also increasing. Now, all these crises produce more deal flow, and I think that deal flow is going to improve in the coming, probably not yet, but I would say next year, when we have also visibility or more visibility, we are going to find a lot of opportunities of this kind, as we did in 2014 or 2013 after the other crisis.
Well, let's talk about money during crises. Laura, I know that Waterland invests across a number of different countries. And so one of these questions that I think was interesting that maybe you can give your perspective on Waterland's strategy of how is Waterland, or is Waterland taking advantage of some of the government rescue packages in the various geographies that you're invested in? To have some of the Waterland, maybe not specifically in Ireland, but to the extent that you can speak to sort of the broader Waterland portfolio, have some of your portfolio companies had access to them, taken advantage of them, and has it been helpful?
Yeah, I think we have taken advantage of support systems that were in place in a number of European countries. I think, you know, we've had businesses that have been closed for nearly 3 months and continue to be closed in maybe the gaming industry, or we've had restaurants and that sort of stuff. To speak from my own experience, the nursing home sector in Ireland has received some supports for additional costs that have been incurred as a result of COVID-19. I think, you know, a number of our other teams have also received supports from their respective governments. I think there has been mixed experiences. I think certain countries have been a lot better about being very clear about what the guidelines are, what will be available, when it will be available, and making those funds actually available to companies and individuals. I think other countries have been a bit more ambiguous with that, which has created confusion. I think also the timing as to when those payments will continue until, I think, is a moving feast, I suppose. Understand why that is, given that we don't know what the impact of COVID is. But I think it creates uncertainty, not only for, you know, our portfolio companies, but right across the board. So what I would say is, you know, I think where it's been certainly the most successful is where it's been very, very clear what the guidelines are. There's been no ambiguity, and also being able to access the funding has been very straightforward. Where it's been a bit grayer, the governments maybe haven't given as clear guidance, and the application and the criteria have moved a little bit. That's definitely created more confusion. But I do think across the board in general, the European governments have acted much swifter, I suppose, this time than in other recessions, and rightly so, given the huge impact in such a short period. And I think it really has helped to I suppose keep things going at the moment. But my bigger concern is really around Q4 and what happens when some of these government supports will tail off. And I think that what's happening at the moment is, you know, maybe it's delaying decisions that need to be made in any case.
Mm-hmm. Great. I think we have time for one more question. So the last one will be for Carl. And, you know, you talked about investment parks as a theme investment. And I know, you know, some of the other kind of themes and areas that Invest Industrial has focused on. Going forward, where do you see either new theses or themes emerging, either, you know, taking stock of what's going on with COVID, or beyond that and having nothing to do with that? Where do you see Invest Industrial growing in terms of investment themes going forward?
Well, the COVID recovery, which for some sectors, we talked about it, is no recovery at all, because they've been almost struggling to cope up with surging demand. And for others, you know, you take the cruise liner industry as an extreme on the other end, etc. Multi-year expectations for any recovery, etc. The in between there, technology is going to change many sectors fundamentally in ways that are going to be much more drastic than in the past. So with that, you know, we are also changing ourselves in that regard. We see a larger piece of our investments having having technology as a play center stage it's still a niche, but it has entered the sort of the investment committee in a very different way with COVID. The other big trend right now is a return to more regional self-sufficiency and a wave of anti-globalization right now, which is and only applies to certain sectors, and overall we believe that there is still especially for European mid-market companies, that internationalization is still live and well, and we're looking to be better and better at helping our companies to plug into that.
It's interesting. I think we're all doing our businesses differently, and I think we're all learning from our experience during the confinement of how to use technology better, how to connect with each other, and hopefully we'll be thinking more thoughtfully about all sorts of work collaboration and travel going forward. Thank you so much for all the great, really interesting questions. And really thanks a lot to the wonderful panelists, experts for this really interesting conversation.